look at all of the trends, whether it's like US foreign investment into China, the percentage of iPhone components that are built in China, sort of the number of machine shops that can actually build ammunition or can build spacecraft in the United States is only increasing. All of these trend lines are on the, sort of right direction. I think the biggest fear is if China invades Taiwan in 2025, will those trend lines have quite caught up to where they need to be? So I do think we have this 4 to 5 year gap where the United States could be potentially relatively weak. But, I love this country and I'm so stoked
Pretty
that,
great country
I get
still.
to
Yeah. Some people are decliners. Yeah. It turns out still the best.
Still the best. Going to be the best for the next century. And I'm going to make sure that that's the case.
This Week in Startups is brought to you by Vanta. Compliance and security shouldn't be a deal breaker for startups to win new business. Vanta makes it easy for companies to get a SOC 2 report fast. Twist listeners can get $1,000 off for a limited time at vanta.com/twist. CLA. Innovation takes balance. CLA's CPAs, consultants, and wealth advisors can help you get from startup to where you want to end up. Get started now at claconnect.com/tech. And LinkedIn Jobs. A business is only as strong as its people, and every hire matters. Post your first job for free at linkedin.com/unicorn.
All right, everybody, welcome back to This Week in Startups. Really excited to have our guest back on the program. He was on last week talking about LK99, and he is the co-founder and president of Varda. Delian Asparouhov is back with us. So, and are you still a partner at Founders Fund, or did you relinquish that? Are you a venture partner? What's your status with Founders Fund then, if you're starting a company?
Yeah, still an investment partner. We, at this point, have almost half the team that are both investment partners and, building companies. And so it's a thing that we actually, are leaning into and is literally in the name, right? Founders Fund. We want to be a fund filled with founders, basically. So
that's interesting.
Yeah, still actively investing.
So Keith Raboy starts companies.
Trey Stevens with Argyle.
Yeah, Trey's, we're doing that, yeah. Okay.
Ryan Peterson, obviously, somewhat different in that he started the company before joining, but he is still quite actively involved at Flexport. And he actually recently did an interview with Bloomberg or CNBC where he talked about how actually joining Founders Fund remotivated him to work even harder, at Flexport. So he's been, sort of picking that up. Peter always has, sort of some, project going for a while. He was pretty involved in a handful of biotechs, and I think he's still doing that. And then one more of our partners, I don't know if I can quite reveal it yet, but anyways, he's got an incubation, going that hopefully will be announced soon. Although there's not that many.
Singerman's got to run the fund. He's running the fund, right, Brian? He's running the fund.
Yeah, exactly.
So somebody's got to stay at the office and make sure that the LPs are satisfied. But that's a very interesting approach because it's not exactly like the studio model because you'll invest in stuff like I saw Neuralink this week. You guys led the investment. Or last week it got announced. But it's not a studio like Science
Atomic or Sutter Hill or Science.
Those. Yeah. What's different about this model? Why does this model work and the other ones don't seem to work?
Obviously, some of the studio models work quite well. Obviously, like Mike Spicer with Sutter Hill and Snowflake, is not exactly the worst outcome.
Yeah, that one worked.
So, yeah, that one worked. And I'd say, obviously, Atomic, like HIMS is, I haven't checked the latest stock price, but I think it's like a $4 billion, sort of company. So Jack Abraham, I think, has managed to prove the model, working. I would say our model is unique and distinctly different in that I wouldn't say it's our practice to be regularly incubating companies. If you look at how often we're doing it over the past 23 years, it's probably once every 3 or 4 years on average that an incubation is happening. And I typically say at Founders Fund, it's not in our practice. We're only going to be doing it when there's a handful of things that are true. One, when this company basically wouldn't exist if not for us starting it. There's not just an available investment. You'll never see us incubate a grocery delivery company, given that obviously there's a million companies basically doing
last minute convenience store delivery. How's that going to work out?
Exactly. Versus I would argue Palantir, Argyle, Varda, Open Store, all these companies are companies that would not exist in their current forms if not basically for the incubating partner. And typically it being in an industry that sort of partner wants to absolutely dominate. And so Trey basically has absolute domination on anything defense tech related. I'd like to think that Varda has allowed me to be a really strong investor in aerospace. Keith obviously has tons of fields that he's very strong in as an investor, but even more so than before, consumer and e-commerce. He's obviously very deep and close to the metal on, and he's made a handful of sort of related investments due to his experience at Open Store. And so I think a part of what makes it work is we don't try to do it super regularly, and we actually don't have a whole lot of infrastructure. If you look at something like Atomic, they have a lot of infrastructure to help basically spin up these incubations. If you want to do an incubation at Founders Fund, you are your own support. Good freaking luck. And so it sets the bar quite high.
So there's not some marketing team that's going to sit down with you and be like, "Hey, we got your brand. Here's your choices," or here's your HR department. We've got 10 candidates for your management team. You're on your own.
You're on
Here's
your
some
own, so you got
cash.
to be highly motivated to go do it. That's why I think we've got a pretty decent hit rate. Like if you look at some of these other, studio models, their hit rate is actually a lot lower than our incubations. And part of it is like the bar for us is so high to actually bother.
My take on these is like everybody has ideas, but the motivation to see them through and to give up a decade of your life, which is what it takes, is the rare commodity in the world. So yeah, you can come up with an idea of what you want to do in space or, real estate or defense tech, but are you willing to put in 60, 70, 80 hours a week for 500 weeks? Yes or no?
And have a second job on top of that too. Like you still need to be delivering returns to LPs on top of it.
I saw it with, my bestie Friedberg, who, was doing this kind of model. And I think getting a management team in place, like you can get these things started, you can come up with great ideas, but finding great management is the other problem. I know John Borthwick did it in New York with BetaWorks, and then Mike Jones and Peter Pham did it with Science. And, because you can hit something, you can think it's a good model, right? Because you hit a couple of wins. But in our business, you're going to hit wins, right? You're going to hit singles, doubles on some regular basis, and sometimes home runs, rarely grand slams. But I think the model's broken because the rare commodity is somebody willing to give up a decade of their life. I think that's, the rarest commodity in the world is somebody with the motivation to go at least 10 years. And most people, they can't go 10 weeks.
I think a part of what makes our model work is, like I mentioned, it's so little support from the broader team that it sets that bar really high. So it's like, are you really willing to give up basically all this opportunity cost if you could keep investing from this phenomenal platform founders want to make great investments? You better be willing to give up, a lot of your time, working from that platform to instead basically build this company, which sets a high bar. And I think relative to most of the incubation models that at least I've seen, we are far less punitive to the founding CEO, the person that is there day to day, than a lot of these other models. So you are actually able to recruit this world-class, basically founding talent.
Punitive how? In terms of how much equity they get?
Yeah, exactly. In terms of how much ownership basically founders fund demands. There's a reason why Matt Shibb, the CEO of Argyle, is willing to work at a founders fund incubation. He owns just as much as Argyle as a lot of other top CEOs own after their first 4 or 5, 6 rounds. And a part of that is in some ways, because you sort of get that founders fund capital early on, you kind of typically skip the equivalent of a sort of pre-seed or seed financing. Most of our incubations basically jump into the world effectively with a Series A.
So just 10 million or something to get off the ground, basically.
Yeah, maybe the last handful of incubations, basically Open Store, Varda, Argyle, all had roughly $10 million seed rounds. But they're effectively the equivalent of what a normal founder would have to go through is pre-seed, seed to eventually raise that Series A.
I'm excited for what Palmer's building. And give him my regards.
I realized when I brought up the name, I was like, let me shift over to
everybody thinks we got some crazy beef. I was like, Palmer. All I said was you shouldn't pay people to post, it's just a bad idea. It's going to blow up in your face, and your employees and your family are going to take the brunt of it when you get fired. And you did get fired. So what's the big deal here? But he took it very personal. I don't know. It's,
no comment.
I wish him all the best. And I think it's great that it's a really interesting part for us to start our discussion here before we get to Varda. Silicon Valley's been anti-supporting the military. People at Google were we don't want to do anything with the military. We don't want to sell services. How do you think you're safe in California here to pursue self-driving cars, search engines, ad networks? It's because there's a military here keeping peace on the goddamn planet, which has multiple hot zones if you're not paying attention. Maybe you could talk about that decision-making process to get into defense tech, if you were involved in it at all, and your thoughts on Silicon Valley's aversion for a period of time here. It seems like we're breaking through it to support the military.
Yeah, but if you look at the 2016, 17, 18 timeframe, there were a number of these tier 1 venture capital firms that have now invested in defense that at the time, literally in their LPAs, basically listed defense as effectively one of the 3 major sins. It was, effectively gambling, porn, and defense were the 3 things that they basically promised their LPs.
Don't forget drugs.
Yeah, exactly. And drugs.
Psychedelics.
I guess those 4.
Yeah.
Which, people are shifting their tune on psychedelics, as well. Obviously, I can't claim, Founders Fund was very pro-defense tech. Obviously, even before I joined back in 2004, obviously, Peter Thiel incubated Palantir, Trey Stevens with, Argyle. And at least in the aerospace sector, it's a sector relative to, let's say FANG that is this hyper-woke, anti-defense, sort of mindset, at least within aerospace. by default, since the 60s, all of aerospace has always had to collaborate with defense, given that rockets and ICBMs don't look that different from one another. And so I think there's some accepted even in large companies like SpaceX that you would argue should start to feel like the culture of a FANG, given how large the corporation is. Even there's a significant amount of comfort of look, at the end of the day, we do sometimes launch, Starlinks, but we also sometimes launch Air Force, Navy, Space Force, sort of type satellites. So I think it's less of a, sort of thing in the Los Angeles defense aerospace type community to, have this strong aversion to it, given that you basically can't work in this field without some level of collaboration with defense. And then, obviously Founders Fund was very early to this trend, in 2004, obviously doubled down in 2016. And then Varda definitely would not be where it is today, if not for standing on the shoulders of those two giants, and that, our ability to go from founding date to $60 million Air Force contract in, effectively exactly 2 years was definitely only possible for having the guidance of folks like Trey Stevens.
Yeah. If you're a SaaS or services company that stores customer data in the cloud, then you need to be SOC 2 compliant. You knew that, from a third party. And you need that third party to close big deals. And if you want to get compliant easier and faster, you need to use Vanta, V-A-N-T-A. Vanta makes it so easy for you to get and renew your SOC 2. On average, Vanta customers are SOC 2 compliant in just 2 to 4 weeks. Compare that to 3 to 5 months without Vanta. And Vanta can save you hundreds of hours of manual work and up to 85% of compliance costs. This is a total no-brainer. And Vanta does more than just SOC 2 compliance. They also automate up to 90% compliance for GDPR, HIPAA, and more. You can't afford to lose out on major customers. We all know that. Listen, it's a hard year. Last year was hard. You can't lose those major customers because you don't have your compliance dialed in. Just work with Vanta. Get your compliance automated and tight is right. Lock down those big deals. Here's the best part. Vanta is going to give you $1,000 off. That's 10 hundies. Get $1,000 off at vanta.com/twist. That's vanta.com/twist for $1,000 off your SOC 2. It's just great to see Silicon Valley. I think Elon's influence has had and his success with SpaceX has a big influence on people doing harder tech, and focusing on problems with real moats that are really hard. And the commitment level, it's kind of nice that this I don't know if you were here for most of it. I'm not even sure how old you are or how long you've been at Founders Fund, but this weird entitlement diversion that happened during Web 2 and into the Google, Facebook, campus kind of culture. I'm kind of glad it's over. I'm kind of glad that we're back to austerity and grind and, just more focus and less people and less accoutrement and nonsense.
Yeah, my Silicon Valley career started roughly summer 2012. I was actually one of the early Android engineer interns over at sort of Square, and so you could definitely still see the remnants in some ways of the 2009, obviously depression. Obviously, it didn't hit tech nearly as hard as it hit the sort of general economy, but it was interesting to I spent my first call it 9 years, 10 years of my career basically inside the heart of Silicon Valley, and for those 9 or 10 years, it only consistently amped up, and especially I think really took off in 2016. Where I think there was something about Silicon Valley where because Trump was president, it felt this need to go hyper left as a reaction basically to the president to show that the United States was not sort of representative of Trump. And I find that some of the entitledness and the sort of interest in bringing politics to the office being somewhat related to that, and that really accelerating in sort of 2016. And so
I agree. Yeah. I mean, it was a depression for us. The stock market, I think the NASDAQ went from 5,000 to 1,600 post Great Financial Crisis. And there was austerity measures. And if you hired somebody, you wanted to be really thoughtful about hiring these two people because you didn't know if you had to lay one or two of them off a year later because the next shoe was going to drop in the economy. So there was a certain fitness. And I agree with you. 2016, I think a lot of people thought Trump was an existential threat. And, and I believe he is. I mean, we could all differ in that, but I think he would have overturned the election. Absolutely. And I think he'll do it again. I think he's got no morals and would absolutely do that. So I think that while the reaction was wrong, I think people probably nailed it. Hey, this guy's got a little bit of an existential threat here. And it did throw people off their game where they just had this, I guess, free cycles to be distracted. I think Brian Armstrong's putting his foot down, which I saw Paul Graham tweeted about it and I retweeted it. It was a pretty brave thing to do 2.5 years ago to say, you know what, I know you're going to cancel me, but it. We're here to change the financial system for the better, the end. If you want to talk about anything else, please do it on your own time, but not here. I thought that was pretty brave of him at the time. What are your thoughts on sort of culture wars and keeping everybody focused. And then we'll get into what Varda does.
Yeah, I mean, for a while we had this saying at Founders Fund, which is, we wanted to invest in companies where they explicitly said, bring yourself to work, but not your whole self. And
exactly.
There's things that are just not appropriate to be brought up to at the office. And I think it's something that we've pretty proactively screened for. In some ways, it's what we've talked about online, or obviously, Peter with, Trump in 2016, in some ways filtered out a set of entrepreneurs that even thought that way very early on.
Yeah.
And so I think in some ways, relative to, most of the folks in Silicon Valley, we haven't had to deal with this problem as much, in our portfolio, in that the, sort of founders that choose to work with Founders Fund are predisposed to, some level of, being extremely aligned with, Brian Armstrong. And so, they sometimes can also use this as a bit of an excuse too, which is oh, well, we can't do X, Y, or Z initiative because Founders Fund is on our board. And obviously they're going to vomit all over that. When it's really the CEO just doesn't want to do it. But,
it's good cover.
We'll have to, exactly.
Our board member doesn't want us to do, some diversity and equity thing or some ESG thing or, and now all that's being unraveled and people are getting sued. I don't know if you saw this last week. It's good to have you on the show because you like to talk about stuff. You're an underrated guest. I don't know if you saw last week, but a venture firm that's specializing in investing in Black female entrepreneurs is being sued by the same person who did the Supreme Court lawsuit saying, hey, we've got 3 women, one's Asian, 2 are white, who got turned down for funding from your firm. This is, racist and this is discriminatory. And that's where all of this identity politics leads eventually, is to everybody feeling bad and nobody, gets out unscathed.
Yeah, I mean, I think obviously the state UC Berkeley type funded things, it's inexcusable for them to be doing any type of racial discrimination. As you get into smaller and smaller settings, right? At some point, it's if you have a college club that is immigrants from Ghana or something like that are at MIT, they should absolutely be allowed to have a club that is only immigrants from Ghana. So I think it's it depends on how much public funding is related to it. But at the same time, even if you're a private institution, it's that group that was the bakery that refused to obviously, sort of say to, gay members they were allowed due to religious freedoms. But this group with VC isn't allowed to do race because of affirmative action. So to me, at the large scale, when it's publicly funded institutions, the, sort of, affirmative action to me is a no-brainer that it is sort of purely racist. As you get to sort of smaller and smaller institutions, they have a little bit harder time, why is this Black funded group not allowed to only fund Black entrepreneurs, but the bakery is allowed to deny gay people? To me, it's right. They kind of feel
because
they're one
religion,
and the same.
I guess, is
but one's allowed under religious freedom, but the other one's not allowed due to affirmative action. So that's one where I actually think I probably bend a little bit differently than other people that are maybe on my side of the camp. But yeah,
I was with you just for hey, we're so behind in the venture industry in some folks getting funded, and hey, here's a group of Black women who raised a fund to go do this, and now they're getting penalized for it. And I was no good deed goes unpunished. But I also understand the counter argument, which is it's got to be a bummer to be an Asian woman, pitch them, and then be told, I'm not, and then have in the back of your mind, is it because I'm Asian that I didn't get this opportunity? And it's kind of a bummer. Anyway,
I think what it really shows is there's not a consistent set of legislative policies where it's I might have particular opinions on them, but I do generally agree they should be legislated. They should not be based off of opinions, given how touchy these subjects are. And so I think the real thing is turns out maybe affirmative action was too extreme, but maybe 0 is also too extreme. Maybe there needs to be something halfway in between.
Yeah, and it seems like all these discussions, we've lost what was always a great thing in Silicon Valley, which is first principle thinking, logic, really great debate, creativity, and finding new solutions to problems. But it is what it is. Tell me about Varda and how you came up with the idea and how you got it off the ground and convinced your partners at Founders Fund to, give you the check to start this.
Yeah, trying to convince your general partners that you want to, quit, 50% of your job and still get paid the same cash and carry is definitely not a trivial argument to make. But yeah,
pretty good deal if you can do it. Pretty good deal if you can do it.
You better be convincing them that you're going to be bringing in even more carry than before. But I've been thinking about this idea for almost a decade. My original fascination with this sparked around the 2009 through 11 timeframe, where the first handful of both International Space Station studies were being done around in-space manufacturing, and Google released this Lunar X Prize, if you remember back in the day, with Peter Diamandis, that actually had a subcomponent of it that was in-space manufacturing related. And I think part of why it really, clicked for me was I'd always, noticed that in human history, anytime you saw any type of permanent human settlement happening, it was always due to, sort of economic, incentive. The example that I like to provide, which has some potentially, moral undertones that aren't always perfect, but I think it's a good example, which is if you look in the 1400s, the Portuguese Empire and the Chinese Empire, they both basically came up with naval technologies around the same time. The Chinese Empire took this approach of make basically massive boats, sent them to Africa, captured some elephants and giraffes, things like that, brought them back to the emperor as prizes. Versus the Portuguese took the approach of make very small ships, set up a trading post on the northern coast of Africa, and then basically work their way down. And as they actually created economic activity, established net new trading posts. And if you fast forward basically over the course of the next 100 years, the Chinese basically shut down their armada because they're this provides no economic value for us. We're getting some fun elephants and giraffes, but nothing consistent, so we're shutting this down. The Portuguese basically had a naval empire that ruled the entire world. And so I kind of think of space the same way, where it's you can't just build these big rockets and go capture the elephants and the giraffes. You actually need to basically set up these trading posts that are, economic activity. And we've done a decent job of that so far with Starlink and Planet Labs, basically internet, from the satellites and taking photos of the Earth from satellites. But neither of those really are any type of, let's say, atoms-based, economy. It's all just bits passing back and forth via radio waves. And to me, the very first natural next step, as much as I'm really excited by things like asteroid mining or lunar ice mining or lunar bases, the real natural next step was taking this work from the International Space Station of manufacturing things very near Earth in low Earth orbit and then bringing them back down, just because the simplest supply chain. You basically can take things from Earth, get them into low Earth orbit for pretty cheap, and then bring them back, and there being economic value in that. And so I thought that was basically the way to make humanity more and more likely to actually be a permanent multi-planetary species, because you got to establish that trading post. Then that's what makes the next trading post available, so that eventually you have permanent settlement on Mars. And so I kind of put the idea on the shelf, a handful of times throughout the years. And then finally in Q4 2019, I was working at Founders Fund, and a SpaceX rocket had basically launched and landed 4 times in a row. And that to me was basically the marker of, hey, the economics of this business model that I've been thinking about for the past decade finally makes sense. Where up until then, everything was basically NASA sponsored on the International Space Station. It only made sense for the government to do because it was highly expensive, not possible to commercialize. But now Elon was launching and landing rockets all the time. Now is basically ready to be commercialized. So I spent basically 2 quarters, Q4 19, Q1 20, basically actually originally exploring this as an investment thesis. I was thinking it's a lot easier to invest in than go build a company. Again, tons of opportunity costs and PTSD that come out of building a company. But after 6 months, basically realized that all of the various groups that I sort of met with that were working on this either were just too academic and didn't know how to bring a product to market, didn't have the appropriate ambition, didn't have the appropriate sort of spacecraft skill set. And then, end of Q1 20, COVID hits. Peter Thiel basically tells everybody at the firm, stop investing for 6 months. I lost my mind for the first little while. I was what the hell do I do? I basically don't have a job, but I'm getting paid a high salary, which is, the equivalent of, the 7th level of hell for me. And so, ended up, going on this walk with Keith one day, and his, feedback was hey, figure out how to make yourself productive. Building a company is probably the right way to do it. And so, ultimately ended up realizing that the one thing that I would ever want to build is this thesis that I've been thinking about, for the past decade. So that was basically, December 2020, put together the early founding team, went around to the general partners at the firm and basically said, hey, I think this is an idea that's very promising. I don't think it'll exist in the world if we don't incubate it ourselves. And I think this is something that will make me actually a better investor, because the moral authority that I'll have for having built this type of company and the deal flow access that I'll get in anything aerospace, deep tech related will basically, offset any decrease in IRR from not spending as much time. And I think generally that's played out. I think both my deployment on the investor side has improved since starting Varda. And then I think also, Varda has gone, pretty damn well over the past 2.5 years. So
what is the first commodity going to be at the trading post, I guess, if we were going to use this analogy? Or what's your short list of items, provisions, things that will be built in this, trading post or laboratory? I don't know what you prefer to refer to, what you're going to put up there as.
Yeah, the first one for the next 5 to 7 years is just going to be pharmaceuticals. Ultimately, if you look at pharmaceuticals, they're the sort of highest revenue and highest margin physical product. And especially for space right now, the biggest limiter is basically just how much mass you can move up and down from orbit. So, there's a ton of different products that have been pursued on the International Space Station, but pharmaceuticals is the only one where if you bring back 40 kilograms of it, you can actually, make $50+ million of revenue, sort of off that, which can, justify the costs of basically operating the trading post. And thankfully, on the International Space Station is where pharmaceuticals have been the most proven out. So probably the most blockbuster case study was Merck took their biggest drug, Keytruda, does $25 billion a year revenue for them. they were basically able to show that in the microgravity of space, they were able to make a new form of that drug where rather than having to come into a clinic every day for 1 to 4 hours of an intravenous drip, they could instead basically send you home with 2 weeks of syringes and you just come get those replenished at a pharmacy. So now you can basically just inject yourself at home and not have to have go into an IV clinic or have a nurse basically monitoring you. And the amount of drug you have to make up there for that $25 billion of revenue fits within our sort of current capsule. And what was really exciting was the chief scientist at, or not the chief scientist, but the most senior scientist at Merck that worked on the International Space Station on this study. For the first 2.5 years of the company, basically wouldn't, get back to us and, didn't seem that interested in what we were up to. I think finally, as he started to realize that it was, sort of coming to life and we were actually going to be flying, he actually finally got back to us about a week or two before our first launch. This is about 2 months ago. And then we actually had a CNN article come out on the day of the launch, and he provided a very complimentary quote about us. So this is a very senior scientist at Merck, Paul Reichart. They basically said something along the lines of, the ISS was a great place to be doing research, but was really limited by cost and cadence because it's, run by the government. Varda is bringing something to the market that is very appealing to, what we do at Merck. And so, we're basically going to be a pharmaceutical company that happens to have, our manufacturing in space for the next 5 to 7 years. I aspire to one day have this trading post do more than just drugs, but drugs are probably the only thing that makes sense for the next decade.
And it's because manufacturing them in space is better in some way or different?
Think of it as like a bioreactor that has a new knob. So if you think of like your bioreactor that sits in any lab, it has a bunch of knobs that have been, well-tuned over the past decade. Everything from like, mixing rate to what temperature you want at it, to what chemicals you put on there. And imagine like we're just bringing a new bioreactor to the market that has a new knob that nobody else has access to, which is basically gravity. And it turns out gravity is one of these like most important, factors in the equation that determines how various chemical reactions actually form. And sometimes it's good. Sometimes it makes the drug better. Sometimes it's worse. Just like sometimes if you overheat a drug, it makes it worse. But sometimes you overheat a drug, it makes it better.
How much research has been actually done on this process? Is this like, we've done 1,000 experiments or 10 experiments over the last couple of decades of, being in space?
I'd say think on the order of like, there's probably been like 100 experiments that have been done, but the ones that are actually sort of interesting, data sets, probably closer to like 20 or so. So it's definitely a nascent field. A lot of, Varda's job is to take what is now this nascent field and take it from more basic science to something that is like a repeatable process that can be applied to manufacturing. And so that's a lot of what we work on, sort of day to day. Now that we've basically, done this first mission where we proved we can operate the trading post, now a lot of it is show that we can do this very consistently and show that this isn't just like science and us guessing how this knob can be applied, but more here are particular problem sets that this knob is applicable to, and we can consistently basically solve that problem on behalf of our customers every single time we go up there. And so that's sort of the next call, like 2 to 3 years of the company is, taking it from one-off operation to pharma customer has problem, Varda solves problem, and we do that all the time.
All right, everybody. Stephen Estes is a principal at CLA, Clifton Larson Allen. This is a professional service provider that specializes in CPA, tax consulting, and wealth advisory. Welcome to the program, Stephen.
Thank you for having me.
So you specialize in VC-backed high-growth startups. In those first year or two, you don't have revenue sometimes. Then revenue starts to kick in. What's the standard operating procedure for getting information to your investors and to your board and shareholders?
Yeah, so I think it's imperative that companies know their numbers and also understand what it is that the investors are looking to see. And that's, if anybody's ever watched an episode of Shark Tank and see Mr. Wonderful, and if you don't know your numbers, it's a very quick conversation. So having a CFO on board that not only knows the industry as far as, SaaS and how to, recognize revenue and things like that, but also has a lot of experience putting together pitch decks that knows the various metrics that the board's looking to see. I think that's pretty imperative to being successful and raising your next round and continuing to grow.
Get started right now at claconnect.com/tech. Let them know your boy Jake Howe sent you. claconnect.com/tech to get started right now. And so the customer, at least at the onset, is going to be either the government who wants to subsidize some of this stuff because they have a vested interest and grants, or pharmaceutical companies. Those are the two customers.
Yeah, so we have some DoD customers around basically like our space infrastructure that we build. So it turns out when we bring the drugs back, we bring this back in this reentry vehicle that basically flies through a very similar regime as hypersonic boost glide missiles. So the DoD is interested in basically utilizing us as effectively, think of it as like a next generation wind tunnel where, whether you're the Wright brothers or you're building a Boeing 747, basically what you're trying to do is, test out your basically vehicle, systems. We do that same thing in this reentry capsule where we basically stick on a new wing shape, we stick on a new navigation sensor, and basically bring that back and allow them to test the system before having to put it onto the eventual, sort of missile system. We have a couple of sort of DoD grants. There is some, government interest around the, sort of pharmaceutical side, but definitely less so than, DoD. And then mostly, it's like top 20 biopharma, effectively some mid-stage biopharma that we're engaging with as well. And, hopefully the first handful of those contracts we can announce between, now and the end of the year. And our first mission we just did, about a month and a half ago. Second mission will be beginning of next year. And that second mission will be the first time that rather than basically flying an in-house basically demonstration pharmaceutical ingredient, we'll basically be flying a customer's pharmaceutical product.
And you're using some combination of SpaceX and Rocket Lab to get cargo into space. Talk about a little bit about how you get cargo into space, and because this business wouldn't exist if you didn't have the ability to do that affordably. Yeah.
Yeah, even I think a lot of people think, oh man, it's changed so much in the last decade. Even like 2-3 years ago, Varda's business model, wasn't really particularly possible in that. SpaceX has recently launched what's known as like the transporter series of rockets, where basically rather than having to book a whole rocket yourself, you can now instead basically book an individual slot, like the equivalent of sort of Uber rideshare, and they make it pretty flexible. Of like if you miss your ride, it's fine to like rebook and go on to sort of the next one that's like 3 or 4 months later. And so now rather than before, rockets were like, oh my god, if I miss my ride, it's like a $50 million penalty. Now it's like a $200,000 penalty. And so that's changed over the last 3 or 4 years. So basically SpaceX is the one that basically gets us up there. And then for these first 4 demonstration missions, rather than having to, build a satellite basically platform. So think of it in some ways like the, cement foundation of the trading post. Rather than us having to build that cement foundation, we can instead just focus on the factory that goes on that cement foundation and buy the foundation from others. And that foundation has the solar panel, the battery, the primary radio, basically everything that you see in a standard satellite, they basically provide for us.
A shipping
sort of at Rocket Lab.
Container-ish, right? Yeah.
Exactly. Yeah. And then we just focus on the inside of the shipping container that is just like, here's the actual pharma manufacturing and that little reentry pod. Because
so is that what Rocket Labs is building? Yeah.
We build the pharmaceutical factory and the reentry pod. Rocket Lab, let's say, builds the shipping container, and then SpaceX builds the actual cargo ship that shipping container basically goes on. And thankfully, we don't have to build the cargo ship or the shipping container because we already do that. Varda would have to raise like $1 billion+ to get our first thing to market. Rather than today we've raised $54 million and we've been able to get to our first flight to market.
It's incredible that all of these companies now are working together, and that it's becoming, it sort of reminds me of when cloud computing started to come together, and YouTube and Dropbox were like, do we have to build our own server farms or not? And I guess we could use this S3 thing. But Dropbox went from having their own racks, then to being on the cloud, then deciding they were going to do their own racks. And oh my God, they blew $1 billion, some crazy number, building out racks. And then we should have probably stayed on the cloud because it was so much. This is becoming now like a bit of an ecosystem with multiple platform players, huh?
Yeah, I always describe as as somebody who's obviously been obsessed with the early days of the internet and, the 2007 through 10 era of the internet, when you saw things like AWS and Azure come online. That's basically where we are in the sort of the space economy where, SpaceX and Rocket Lab and these groups are the equivalent of AWS coming online. And think about it, sort of how many net new business models that enabled, where Uber never had to think about server, sort of scale up and, what that meant. They could instead focus just on their front end application and acquiring drivers. It's sort of the equivalent. We're man, if I had to be focusing on building rockets and building satellites, no way would I have made the amount of progress. No way would I have these DoD contracts. And it ends up being a huge win-win on both sides. AWS is both a massive business. Uber is would have been more massive if they didn't, kick out Travis, but it's still a pretty massive business.
It would be twice as big. Yeah.
Yeah, exactly. And, both, Varda gets to be a massive business over time, and the infrastructure that we rely upon also will build up to be massive businesses.
All right, listen, you're listening to The Next Unicorns, right? That's table stakes. Well, if you want to start on the path to becoming a unicorn yourself, you're going to need to find and hire great candidates. And how do you do that? LinkedIn, of course. You're on LinkedIn. I'm on LinkedIn. Over 900 million users now. The march to 1 billion continues for the amazing team over at LinkedIn. And you can attract both the passive and the active job seekers. And all you have to do is put that purple hiring ring on your profile. Then you post some interesting content. When they see that purple hiring ring, it says, whoa, wait a second. I know that founder, I know that CEO, I know that VC. Well, they're hiring. Let me click and check it out. And then all of a sudden you start getting this great inbound, right? We love LinkedIn. I mean, I've gotten some of the most amazing people. In fact, I just got a new personal assistant because things are going so well. And I've got the new accelerator that we have coming in San Mateo. And I need somebody to help me run that and set it all up. And I said, you know what? I need to have an executive assistant again. So we found somebody amazing on LinkedIn, of course. And so here's your call to action. LinkedIn Jobs helps you find qualified candidates you want to talk to faster. Post your job for free at linkedin.com/unicorn. That's right. LinkedIn.com/unicorn to post your first job for free. Terms and conditions apply because LinkedIn is so generous. It's pretty fascinating that this has all come together, like you said, very suddenly the last couple of years. The payload cost has come down so dramatically that, if it keeps coming down like that, it's kind of what happened with storage. The idea, the main reason why video did not become popular on the internet was if you had a popular video, the reward was your website shut down because you were paying for, the transmit, and you would have a cap. And anytime somebody put a video online and it got popular, virality as a concept couldn't exist for videos because the server would turn off. And somebody would be like, I got to wait till next month. Come back on the 1st when my data resets with my hosting company. And that was really, I think, YouTube's big innovation was they're like, you know what? Let's not charge people to store it or to transmit it. And I remember at that moment in time, it was such a crazy concept that you could put a video up for free and it didn't matter how many people viewed it. You never got a bill.
Yeah.
You never got a bill. And people were just like, wait, what's the catch? And the catch was they had just done a model that said, hey, if this goes down X% a year and advertising comes online at, we grow advertising by X%, we're good. It's all going to work out. It was actually like one of the blitz scaling concepts that really did work because you had this kind of Moore's law, or I don't know what the Moore's law for storage is. It's a little bit slower, but it was quite accretive to the business model. So what's hard about this business now for you? It seems like you're on a pretty good pace, but what do you need to prove in order for this business to become a sustainable long-term business? Like what's the goal here in the midterm?
Yeah, I want to make a quick touch on your Moore's law point, which is, if you look at, in the early internet days, whether it was compute, transmission, storage, many of those things saw, sort of exponential, if not, multi-exponential, basically, decreases, in costs over time. That's why you had things like the Moore's law. In launch costs, I think there are some set of aerospace entrepreneurs that have been a little naive on how quickly things are actually going to continue to decrease. And a part of it is there's not really a clear competitor to SpaceX. So, even if, Elon gets Starship online, he's not going to immediately flow through all that, basically cost benefit to every single aerospace company. He's going to capture a lot of those profits himself because he's going to be incentivized to. And there's not any clear competition coming online. It's been basically 8 years now since a Falcon 9 landed for the first time. Nobody else has landed a rocket in the last 8 years. It's not obvious who's going to be landing a rocket basically in the next 8 years. And so, we're definitely, at least at Varda, living in a world where we expect sort of costs to flatline for the next, call it 4, 5, 6 years until, some really, competent, sort of players come online, or Elon for some reason, in the good of his heart, decides to start, decreasing prices for some reason. But I don't think that'll happen anytime soon.
I don't know if you've been inside the Starship. It is a massive payload. That's going to be the game changer of all game changers. The amount of people and products and satellites you can include in that thing is insane. If it works.
But if you can charge people $200 million for it, is he going to really give that up and instead charge them $20 million? I think he'll just charge $200 million. Maybe he'll decrease a little bit to test the demand elasticity, but I don't think he's going to drop it 10x.
Is there more demand? Is there more demand than they have capacity?
That's what's somewhat non-obvious. And I think, it is what, SpaceX is constantly going through, where they kind of need to forward predict what that demand is going to look like, given that they can't on a dime turn around basically supply. And so, if I were in Gwynne Shotwell or Elon's shoes and you're like, hey, I had, sort of Starship online today, is my immediate reaction going to be, let me 10x decrease the cost to see if that actually 20x is the demand? I don't think so. I think what you'll see is They basically just swap it in for Falcon 9 launches originally, keep the price point the same. And then maybe they tweak the prices a little bit down and sort of use that to test demand. And they'll probably just figure out where the efficient frontier is and then probably keep it there for a long time until they basically actually face some real pricing competition or the efficient frontier shifts over time. But anyways, I have a mom that's an economist, so maybe this is me getting too much into like, supply demand curves and obsessing over them. But
well, I mean, you have supply demand and then you have induced demand. And
yes,
this is, I think, one of the great magical things about innovation and entrepreneurship. In the early days of Uber, Bill Gurley was building models and everybody's building models. And like, how do you conceptualize what the market size is, the total addressable market, TAM? And nobody really, the very obvious way to do this, we look at the number of cabs, look at the number of shifts, look at the number of rides, how many medallions. But, what Bill Gurley did to his credit was he looked at public transportation. He looked at rental cars. He looked at, all number of gypsy cabs and just other modes of transportation, bikes, whatever, walking. And when you could get a cheap ride and you had Uber Pool or Lyft Line, other things, it actually induced people to go out more in LA. That was the weirdest thing was LA just boomed. And it was like, why is LA booming? It's like, oh, people are staying home because they can't have a drink when they're out because you have to drive. And now it's unlocked all the drinking and driving people who, were scared of drinking and driving. So I think there's going to be something that could happen where they could induce more people to put more stuff in space.
No, I definitely think it's possible. It's definitely always hard to predict. And yeah, I mean, this, Bill guy sounds pretty smart. It's a bummer that, maybe he wasn't so smart when he decided to fire Travis, but, not my style of being an investor, at least. But I guess to get back to your original question of, sort of what do we need to be successful? I definitely, subscribe to, sort of Peter and Keith's philosophy, which is you need to be basically burning down the number one risk of the company at any one time. The first risk by far was just like, can you even make a trading post? Like nobody really believed that when I first pitched the company. Even some of the customers that had done a ton of great work on the ISS didn't really believe in us because they were like, the ISS is so complex, difficult. The ride down is so difficult. Are you going to be able to do it? We've largely proven that out. We still got to bring our reentry capsule back, hopefully, later this month or, early September. But once we prove that, sort of the next step is what I was alluding to a bit earlier, which is we now need to be able to show pharmaceutical customers consistently that we're basically like able to solve a particular, sort of problem that they're having. And so that's a lot of what our team is focused on now is basically improving, now that we've got that cement foundation that we've built, improving basically that like factory's capabilities and just showing more consistently through our own internal research and study, hey, here are the like, types of problems that our, sort of factory can solve. And we can actually kind of help predict for you. So you don't have to just like, guess when you send it up there. We can actually tell you, hey, based off of some, studies that we've done on the ground, your drug is the exact type of drug where we can go shift it from something that, was only stable at minus 30 degrees Celsius and required a cold chain to now we can make it room temperature stable. So I can decrease your delivery cost to patients by like 100x. And so it's actually going to be way cheaper to just go do this and stuff in space, rather than like constantly maintain these cold chains. So that I would say is like step 2 is consistently, sort of problem, solve problems. Step 3 is basically going to be, okay, now that we've shown we can solve those problems, scale and integrate into their supply chain. So like, let's say a pharma customer comes to me, they say, Del, my thing is, sort of not room temperature stable. Can you fix it for me? We go fix it for them. Then their next response is going to be, great. Can you now go do this every single quarter? And I need 50 kilograms and I need it approved by the FDA and you can never be late. Otherwise my patients die. And then it's like, okay, that's like the next problem. And then the fourth one is now go do that at like, really strong unit economics. So it's step 1, trading post. Step 2, trading post that solves problems. Step 3, trading post that solves problems and does it regularly with FDA approval and brings it back. And step 4, unit economics.
Yeah. So each one of those has its own set of unique issues. And each of those milestones generate. The good news is some of those milestones will unlock funding. Other ones will unlock revenue. I think these pharma companies have so much money that for them, you only have so many cycles. So if you only have, 6, dances on your dance card, and they fill up, I would think there's be quite a rush of pharma companies wanting to get on the dance card. Yeah.
Yeah, and I think one thing that people don't appreciate in the pharma world is the way that they do business development deals has changed a lot over the last 10 years, especially in terms of how they approach early stage technology companies, in that they're much more willing to actually treat you as an equity partner effectively in the drug so that you actually get to participate in the upside. So if you're familiar with companies like Ginkgo Bioworks or AbCellera or Halozyme, all of those companies, like, for example, Ginkgo Bioworks just today actually announced a like $480 million deal with Merck, where basically Merck is coming to them with a set of problems that Ginkgo Bioworks' technology can solve. They're both getting paid some amount upfront for it, but if Ginkgo also succeeds, Ginkgo actually gets a percentage of the downstream
Amazing.
revenues.
Yeah.
And so they've been much more willing to basically, allow these early stage technology companies to participate in that upside. And most importantly, the public markets and private investors have been willing to basically future value or value the future discounted cash flows of those equity portions that the early stage technology company has. So even in that, call it phase 2, where Varda is just showing pharma companies we can solve their problems, the pharma companies are actually willing to put some amount of their equity in their drug up front. Now, that drug still is 3, 4, 5 years to come into the market. We still have to do those future phases for Varda. But I can then go to private investors and public investors and actually show, hey, I basically have, it's not equity in that world. It's called royalties effectively, but you can think of it as equity in the drug. And they're actually willing to value that just as they're willing to value basically top line revenue. And there's even companies that specialize just in the trading of these equities of drugs. So there's a publicly traded company called Royalty Pharma where they don't do any drug development. All they act as is basically a market maker between people that have earlier stage basically equity drugs and like later stage ones. Like think like what Carta is trying to do and like the startup marketplace to provide liquidity. There's literally the equivalent of that of drugs where you can like trade your late stage drug equity and be like, hey, at this point it's pretty late stage, it's pretty like guaranteed. So I want to take some off the top. And so
it's
Varda
like secondary for drugs. Yeah,
exactly. So like Varda will actually build up basically this like equity portfolio of the various drugs that we work on. And who do you want as a co-founder of a company that's building up equity portfolios and a bunch of drugs and needs to think about liquidity? Turns out having a venture capitalist as a co-founder is very, sort of helpful in that.
Well, you'll know when to trim some of those positions. And, I was literally having this, I'm raising our fourth venture fund and I was having this discussion with some LPs. And we were like, we have an accelerator and we invest in companies we have a pre-accelerator with Founding University, where we invest in them before they are even incorporated and we give them money to incorporate. All those kind of things it's very interesting when you can start liquidating a position. If you're investing at 1 to 5 million in startups that are just incorporating, you can liquidate at 250, 500 million, $1 billion, and start to lock in really great returns. And you could do the same thing here. It reminds me of Todd Phillips. He directed The Joker. He said, I made enough off the Hangover films. He's a really cool guy. I've met him a couple times. And he said, just give me a big piece of the back end for The Joker. And they're like, you're a crazy, like low budget, Joaquin Phoenix, like Scorsese, Taxi Driver, experiment. Sure. Thing makes $1 billion. He made $100 million as a director. Directors don't get paid $100 million, unless you're Spielberg and you have some crazy back end, or you're Tarantino. And I think that this is a very wise thing to do, is to align interests. I think it's like part of why so many businesses right now are broken, is that they just don't have alignment between the people doing the work and creation. SAG actors and writers are not getting shares in Netflix and Google or YouTube or Amazon or Disney. They're getting like some cockamamie royalties that don't exist anymore, or some upfront payment. If you want them aligned, give them RSUs in Disney. Like the end. Like, I don't understand why people can't understand this model. It's been perfected in Silicon Valley. Everybody rose in the right direction to make the stock price go up.
And I think in some ways, like it was Silicon Valley that got the pharmaceutical industry comfortable with this model. Like if you look at sort of pre-Ginkgo Bioworks and crew, this was not a model that people were comfortable with. They were only ever comfortable with like, you want to partner with me on my drug? Great, I pay you $1 million. You do my work for me. You solve my problem. Get the hell out of here. Basically, you're not involved in like the winning of this. And so, thankfully, again, Varda gets to sit on the shoulder of giants, both on the defense side with groups like Anduril, but then also on like the biotech side, where like Varda's business model would absolutely not work if not for the past 10 years of maturity of this ecosystem. Again, to the point where not only do you have the concept of like equity in drugs, but now it's so mature that you even have the concept of like liquidity marketplaces for like the equity in these drugs.
What are your thoughts on I think the government's engagement with the startup community right now? You obviously are coming to this as a neophyte, but you've watched SpaceX, you watched Anduril. Now you got your own company in here. What's it like to get these grants? I saw you got like a $2 million grant for the heat shields or something. And, it looks like blocking and tackling, singles and doubles. What's it like to get those contracts, to kind of get into the rhythm of solving problems for the government, them reaching out to you, building those relationships? How does it all work?
Yeah, I mean, I always like to describe, if people think that like enterprise sales is tricky, think of just selling to the largest enterprise in the entire world, which is the US government. Sales cycles are long, tons of different approvals, and they very much so to try to decouple the person that gets to make the recommendation to the decision is the completely different person, the person that has the purse, so many layers of review. But on the flip side, like once you get into it, the largest enterprise is also the best customer ever in the world because they basically almost never churn, and they consistently, if you're providing basically value to them, will basically grow your share of wallet, over time. And so, we're really grateful to be on contract with NASA for the first time with that $2 million grant. We also got that $60 million basically program with the Air Force, both of which we expect to basically continue, to grow over time and act as a really great way for us to offset, rather than having to develop this trading post entirely off of venture private dollars, which I think probably would have been an impossible feat. Being able to do this in conjunction with some of these government agencies, where along the way, parts of the trading post we just slightly modified to make it really valuable for some government use cases, is something we're very, sort of happy to do. And so it's definitely non-trivial, and I think we got lucky in a variety of ways. One was, being incubated at Founders Fund, having folks like Trey, mentor us through this process. Two was, our original head of BD, now CRO, Eric Lasker, that joined us very early on, just had the exact perfect experience. He was at Stripe for 4 years. He actually sold the Trump and the Hillary campaigns onto Stripe back in the day. So it was just first sales into the government. Then was head of Zipline, this Koi-backed company, if you know the drone one. Basically sold a $10 million U.S. Marine Corps contract for them. And he was literally basically with Varda on day one, with us. And so I think having that type of talent with Trey's mentorship from day one is what allowed us to actually capture this opportunity. And there's definitely a part of it that is also luck, where it's this trading post had the, whatever you want to call it, the return boat, the return capsule, that was attached to it. And in the midst of us building this, sort of return capsule, the Chinese basically launched a missile that kind of looks like that return capsule. And so all of a sudden the Air Force, started, reaching out to the world to figure out who's building in this technology sphere. Varda was basically the only company building this. Because if you think about it, there's not really any reason to bring things back from space like Starlink and Planet. They just send their photos down via, internet radios. Yeah. Why would they bring anything back? We're basically the only ones that need to.
Yeah,
so
they let it, and they let it burn up. Right? They're just hey, let it burn up. We versus,
who cares?
It's
if our drugs burn up, doesn't really work. We got to bring the drugs not burnt up. And so we, in some ways, got really lucky.
The only return trips are humans, right? I think.
Exactly. And with the humans on board, you're definitely not sticking some funky Air Force experiments on the outside, and then all of a sudden, you lose Neil Armstrong because you wanted to do an Air Force experiment.
Yeah, no. And your thoughts on the relationship that's building more here at home? We have the CHIPS Act. We're realizing we had a little bit of a dependency on China with stupid stuff like PPE, but also important stuff like drugs. And we're kind of onshoring now, or trying to reduce dependencies, build factories here, build batteries here, process minerals here. What's your experience been? Because you have essentially a factory, you're building, and you're going to be building more. What's it like to manufacture in the United States? And is there this temptation to manufacture in other places that are cheaper, or is the savings not all that much? When you pencil this all out, what does it look like to build Varda, in America versus building it in Vietnam, China, India, etc.?
Because of the fact that we're a defense contractor and the type of hardware that we're building, we actually what's known as ITAR controlled, which effectively means everything that goes inside of a Varda factory or gets put inside of any of our vehicles effectively has to be manufactured inside of the United States, which definitely provides some level of constraints, but offers a lot of creativity. I've definitely been very inspired to watch over the last 3 or 4 years. Obviously, it's very unfortunate that some of the things that motivated some of this change in the United States were obviously things like the war in Ukraine, or some of China's acts in Taiwan. But at the same time, it's been really great to see both the shift in Silicon Valley and people recognizing that maybe venture returns should be aiming for long tail outcomes. And if you look at some of the most valuable companies in the world, like Tesla, Nvidia, and Apple, they clearly are pretty comfortable with building with atoms and building sort of hardware products. It's been great to see both Silicon Valley really embrace that, but then also Capitol Hill really aggressively sort of embrace that. And so yeah, I think it obviously is something that the United States needs to work on. There's things that obviously we haven't fully reshored, but if you look at all of the trends, whether it's U.S. foreign investment into China, the percentage of iPhone components that are built in China, sort of the number of machine shops that can actually build ammunition or can build spacecraft in the United States is only increasing. All of these trend lines are on the sort of right direction. I think the biggest fear is if China invades Taiwan in 2025, will those trend lines have quite caught up to where they need to be? So I do think we have this 4 to 5 year gap where the United States could be potentially relatively weak. But I love this country, and I am so stoked.
Pretty great country still. Yeah, some people are declining. Yeah, it turns out still the best.
Still the best. Going to be the best for the next century, and I'm going to make sure that that's the case.
It's very easy in this country to look at the challenges, and our political system is, it's designed to be convoluted and break and to slow things down and red tape and all this stuff. It's really great to have a dictatorship sometimes when you want to build bullet trains. But then sometimes a dictator's like, you know what? I don't like entrepreneurs. So it. No more entrepreneurs. And entrepreneurs can't work in, I don't know, video games, and they can't work in education anymore, which was basically what Xi Jinping did. He took an entire sector and was like, you know what, education, I guess, yeah, maybe that's not patriotic. So yeah, all the education companies are now owned by the government. Bye. And this guy's, who's running this Alibaba, he's more popular than I am. How about he goes and learns to paint in Hong Kong? Like, they literally killed the goose that laid all these golden eggs. Entrepreneurship. They had an entrepreneurial community in an authoritarian country. They figured it out for a brief moment in time. 20 years, maybe 15. And then Xi Jinping's like, you know what? Let's blow it up. Dictators are going to dictate. Like, they just do this pretty regularly. They blow themselves up. And sometimes things around them. You worried about the China relationship? How worried are you about it? Do you think we're on a track here that is irreversible? Or do you think there's some way to reverse it? I've been trying to talk to smart people about this.
My intuition is that, unfortunately, irrespective of what the United States does, when you have an authoritarian regime that it's past its peak population, its peak economic growth, its peak, sort of, let's say, handle on certain technologies, potentially even ahead of the United States. Like if there were certain areas around like hypersonics or quantum compute or AI, where for a brief period of time, it seemed like maybe the Chinese were accelerating away from this, all of those have completely reversed direction, where it's one of these things where it's like, you kind of like make the analogy to World War II, where it's like a dictatorship may be good for the first year or 18 months, but like a democratic republic is always going to win out in the long term, because when it decides to declare an emergency, its entire populace can go after, a very aggressive approach with a lot more, sort of energy, because they're doing it out of freedom, not because out of, sort of fear. And I think you're sort of seeing that same thing play out here, where America is waking up out of this like, sort of 20-year, feigned end of history stupor. But when it's coming out of that stupor, it's coming out with an extreme aggression where, you'll see that across all these categories that China, sort of thought it was ahead on, we're going to rapidly surpass them. And then I think, unfortunately, when you're this like, dying empire that, thought that they were sort of re-architecting themselves out of this 150-year embarrassment or century of embarrassment, and they're realizing they're not going to be able to, they're going to strike out. I think it's like, no matter what we do, no matter how much we try and deter them, Xi Jinping, before the time that he dies, absolutely is going to, sort of, use his military power, just because he doesn't feel like he has any other way to, sort of show that he is powerful, right? He can no longer show it with population growth. Familiar. He can't show it with economic growth.
I mean, how can Russia show they're powerful? It's like, let's invade a country or make Germany dependent on us, right? And I think that's the hard lesson. I actually heard your first episode with Jacob Hilberg of the security podcast you did, and I've had him on this program twice, I think. And he called it. He knew they had all these headwinds, and everybody was thinking China's going to run away with it, but he's like, population, and it's very hard to innovate when you don't. We talked about it at the start of this discussion. Like the problem with the factory model of startups is who's going to run the startup for 10 years and give up their life for 10 or 20 years. And in China, I don't think entrepreneurs want to keep their head down. They don't want to go to re-education camp. They don't want to have their head chopped off. They want to be a tall poppy, and that's the problem. Who's going to run their AI company with the doggedness of Greg and, Sam Altman, right? Who's going to run their incubator like Gary Tan, right? Or Paul Graham? Like, they just don't have people who are going to care or want to put themselves out there.
If they had an LLM by now, they would have announced it. You know what I mean? Like, they are clearly years and years behind, and I don't think they're going to be catching up in that world anytime soon. All
right. Listen, you're amazing. Thanks for doing this work. It's great to have you on the program twice in 2 weeks. And then now with the LK99 thing, people are starting to say like, okay, I guess it's a different phenomenon than superconductivity. What are you thinking?
I still think it's one of the things where it's just like too early to tell. Obviously, there's this Chinese paper that has come out that is, starting to refute that some of the things that you're seeing around the, superconductivity is actually just, impurity phenomenon. I still think, what I'll say is I don't want to, steal Andrew's thunder, but we have this sample that's, out at, USC, and we're not exactly seeing what the Chinese, are claiming to see. And I think it's just that, these samples are really hard to prepare, and it's still a little bit more like shake and bake chemistry. And I don't think that you can claim that you've perfectly figured this thing out. So I think my point being, I think there's still a lot more work to be done. I don't think we can count it out of the fight anytime soon.
Well, and let's keep building, everybody. Let's keep experimenting. Keep America as awesome and amazing as it is. Entrepreneurship solves all problems. Man in the arena speech, yada, yada. Appreciate you doing this hard work, and we'll see you all next time on This Week in Startups. Bye-bye.
Next up, Jason is joined by Argyle CEO Maret Thatcher to discuss her startup, an AR software platform that helps construction project managers make fewer mistakes. Stick with us.
All right, everybody, welcome back to This Week in Startups. Augmented reality's got a very interesting history, and it's been a technology that was going to be here every year and change everything for the last 10 years. Same with virtual reality. That was going to be here for the last 30 years. And we've been looking, studying the space. When I say we, the venture capital community. And we have found very, very few applications for virtual reality. You have some people playing games, but let's be honest, if you asked 100 of your friends who play video games how many played a VR game in the last month, it would probably be 0, maybe 1. And then you look at augmented reality, and let's face it, most people don't have an AR headset. They're super expensive. They're in limited supply. That being said, when you think about what could work, enterprise applications seem like the easiest layup. Why? Well, because training in the real world and doing complex things in the real world, like let's say surgery or building a building or a home, these are things where you have a lot at stake. And when there's a lot at stake, you can charge more money. When you can charge more money, a startup can become more viable, right? So sometimes commercial applications are what we see first in an emerging category. I've been obsessed. I think AR is going to be the winner in this category, or mixed reality. And so we made a bet at our incubator on a company called Argyle. And the CEO and co-founder is Maret Thatcher, and she's here with us today to show us what she's built.
Thanks for having us.
Yeah. Now, we met because we do a project called Founder University, and we have 2 versions of it. One's a 2-day version, and then the other one is a 12-week course. People have heard me talk about it before, but I believe you came to the 2-day course, yeah?
I've done both, actually. I've been in the entire launch funnel and can speak highly to all of your products. So started
fantastic.
at the 2-day, and it was advertised at that time a women's only one.
Yeah, it was. Yeah.
Absolutely fantastic. And then I signed up for the 12-week course. And then we got into the accelerator.
Oh,
and
great.
now I get to talk to you here.
Perfect. And so we love to meet new founders. We do those Founder University 2 days. We don't see enough female founders. And so we started the Women's Founder University just as a way to show the market that we are serious about meeting more female founders. And boy, has that changed everything in terms of the number of female founders that we are lucky enough to invest in. Just not to make this about gender, but when you see something like Founder University for Women, did that spark anything in you or make you think anything about our firm?
It made an impact for me. I think a lot of times, like when you go to a space that you're really trying to learn about, I'm not trying to posture. I'm trying to absorb as much information as possible. Right. So being in a space with other women who we tend to approach learning in that way has been super impactful. And then I've had the opportunity through the accelerator to be competitive. And so it's just a different world. But the initial approach and having that space to learn, especially when I was a new founder, is just incredible.
Awesome. And when you say compete, people don't know this, but at our accelerator every week, we ask the investors who come to the accelerator to tell us their top 3 companies and why. And so there are 7 companies, which means each time an investor does that, 4 people don't get ranked. And knowing what I know about founders, even getting silver or bronze, that can annoy a founder as much as not even getting a medal, as it were. Speak to what that did, that friendly competition or dogged competition, I don't know how you look at it, in the accelerator to your performance or the performance of the class in your mind?
Gosh, so essential. The first, you're right, like silver was not good enough. I think my very first week, I got maybe one investor who was interested and ranked me sort of in the 3 tiers. And every week after that, I think I got number 1, number 2, but always ranked. And I did get really passionate about practicing the craft, recording myself, doing literally everything you've just always suggested it before, but making it my damn job.
Yeah. I mean, presenting your company in a way that appeals to investors and gets them to take a second meeting, and they understand your vision and they understand why this could be $100 million a year revenue business, that's a skill. That is not just something that is innate in any of us. It's something you can refine, and refine it you did. We also add up all the points week after week. So how did you do at the end of the cohort? And you were in Launch Accelerator's 27th cohort, which just finished.
That's right. I
do you remember?
I cleaned up, and I say that with some humility because my class was awesome, Jason.
Yeah.
But yeah, I won the weekly and I won that event, and then
the cohort.
Yeah,
okay.
Overall.
All right. Well, congratulations on that.
Thank you.
Now that means essentially nothing. Now you must go compete and get customers who actually love your product. So let's talk a little bit about what you're using AR for. And you heard my little preamble there, but tell us what Argyle is doing.
Sure. We help construction go faster and make fewer F-ups using their existing building information models and visualizing them on the job site. So sort of in our space in construction, this has been obvious. We're making 3D models. Let's just put them on the site in AR. But the devil has been in the details, and in getting this to be something that's user-friendly and reliable and shows up where it's supposed to has been a huge challenge. So that's what we focused on.
And so AR glasses, you heard me talk about this. I mean, since the time we invested in your company, Apple Vision Pro has come out. But what platform did you build these headsets on? Because we've been playing with AR a lot with our phones, right? You can take out your phone and it will put digital objects into the screen. What kind of AR? Is there a subcategory for what they call that type of AR?
I kind of call that like tablet-based AR, or like I call it AR window.
So AR window, I like that.
The ones that I was building on initially was HoloLens and HoloLens 2, which is this device. It's clear. It's got this little flip top.
Microsoft's HoloLens,
Microsoft's device. And then in the last year, we've begun using the Magic Leap. This is also clear glass. It's a little more difficult to tell that it is. And this is where I got really excited. All I did is port the app that had been running on iOS and on the HoloLens to this device. And because my app was constrained by performance, my fog of war increased, and I could see so much more of the building than I had before, because the performance on this computer is stellar. It's a fast computer.
Now, describe the Magic Leap, because this is a company that we've wondered in Silicon Valley if it would ever release a product. There was talk of it maybe being the next Theranos, billions of dollars invested, no product ever released. So you must be one of the first people using it, yeah?
I think that's unfair. I mean, yes, billions invested, but this is the product. It is released, and they have a factory. They're building this tip to toe. I got to go check out the factory where they're building the optics, all in-house in Fort Lauderdale. And I mean, let's see, 3-ish billion invested, and they've released this incredible product that's friendly on my eyes, that works on a bright day on a construction site, that is just really speedy and rendering these incredibly huge models.
Does it attach to like unfair. A computer that goes on your belt or something? Like what does it have to attach to? Does it attach to a laptop?
So this is the compute pack.
So it looks like a puck. It looks like a hockey puck. Maybe two hockey pucks. Puck. Yeah.
They wanted to make it a little smaller than what a CD changer would look like. So that's about that size. Sure. And it can clip to your belt, or I just have this. I call this purse version.
Oh, MERS version, yeah. The male version, the MERS, yeah.
And then this just expands and goes over your headset like that. I put it under my helmet hard hat. Yeah. And it tends to work really well. This, you actually had to have clips, the HoloLens Microsoft device. You had to have clips or specialty attachments with like Trimble. So it's been nice to have commercially available headsets and use those. And we're also really excited about getting the tablet version just as user-friendly as this fully immersive 6DoF headset version.
So let's take a look at a video, because a video is worth 1 billion words. And here's a video of a construction site. Now, most people are listening, so we'll sportscast this. If you're not watching, go to youtube.com and type in This Week in Startups and you'll find this. But we're looking at a series of homes, it looks like, and we're seeing the architectural drawings. What are we seeing here?
So this is a resort in Lincoln City, and they own this skinny little lot between their 2 hotels. And their job was to convince the investors that, yes, we can build a food service building, a pool, and another hotel building. So this is what we did in augmented reality. We placed the models of this, architectural and et cetera, onto the site. I did a quick alignment here before filming. And as you peek in, it just tracks everywhere you go to render the models that are for the correct spot.
Got it.
So this is going to turn into a food service building. You can order your IPA here with
So
your
this is
jackets.
a remodeling of an existing building.
This part is right here.
Yeah.
We can fast forward it a little bit, but as we get to the pool here,
Yeah.
and we turn around, they're actually going to be building an entirely new hotel.
Got it.
Back there to the east.
Oh, there we see it. Yes, of course.
Yeah. And
Amazing.
the question is, can this fit on the site? Yes, it could.
So the purpose here by the architects, the construction, the developer, who uses this product? Who do you sell into?
So we sell this from the design all the way to installation quality assurance. This is obviously earlier in the process. This is the design phase. This is an architectural design build firm called O'Brien.
Got it. So you sell to them and say, hey, if you want to show your customers and your clients what this would look like before you have to build on site, this will help close the seal, close a deal, maybe get investors excited, or just help you work with your client to understand their needs better. That's the kind of the pitch.
That's for the pitch for the early folks, but we have a video of people using this for the installation process on site in the detail. So this is a video from our friends at Miller Electric, and they're actually putting up lights. So those are the images of the lights, and you actually set those up by marking up the floor. The way they did this in the past was bringing out their 2D blueprints, measuring out every location, and then setting up lasers to do this process.
So now what we're seeing here is the in yellow on the floor is a bunch of lines of where the lights are going to be. And they're just marking the floor of where to put the studs or something.
You basically got it correct. Yeah, they're going to shine up the lasers to where they need to do those installations. Much faster this way. Much more efficient.
So in the past, what we're seeing here is they're walking around just a cement floor, but they're seeing objects, essentially like CAD drawings. It looks like the original Star Wars game where you're fighting with TIE fighters or whatever and blowing up the Death Star. But it looks like the Death Star, plans when you see them in Star Wars. Beautiful CAD drawings with line drawings, and they can pick where each of those lights are going to be. And I guess the fidelity here and the chance of making a mistake go way down. So is that the sales pitch? You can go faster and make less mistakes, both of those?
Precisely it. We help construction go faster with fewer F-ups.
Oh, okay. So I nailed the pitch to the construction side of the house.
Yes.
So the construction side of the house, when they make mistakes, it's costly. Time and probably materials and the cost of the individuals who have to come back on site. There could be costs that could be like, structural, which could even risk people's lives, I suppose. So those are two sales there. One is before this building is built. The other is while you're building it. How much extra work is it to do this on both sides? Because I know that these CAD drawings are being made anyway. And so if it took, 1,000 hours for this architect to make these plans for the new food service building and the hotel, or maybe 10,000 hours. I don't know how long it takes to make something like that. 1,000, 2,000?
I couldn't say on that. On how long it's taking for the design.
I'm going to pick 1,000 hours.
Okay, we're going to pick 1,000.
How much time does it take all those CAD drawings in that work? And I'm not sure what CAD program they use as a standard these days. AutoCAD, I don't know.
Revit and Navisworks, both of them are Autodesk solutions is what we're using.
So Autodesk has multiple solutions. They spend 1,000 hours on that. How much time does it take to port that and put it into Argyle so you get these benefits?
Literally minutes. Just done with a plugin. It's self-serve. So every time there's an update, they can simply click it into Argyle. And in that process, they get a lot of control over how that's going to render on their end. So lots of choices.
And so what do you mean by control of how it's going to render? Explain that.
Right. So you mentioned that we had sort of a Star Wars, I like to say Tron look.
Yeah.
I think it's a compliment. That's very much our wireframe rendering style to maximize the visibility on a job site. You do not want big structures occluding your view, walls or floors blocking holes in the floor. It could be incredibly dangerous. So we are rendering only the edges. Now, of course, we had some folks say, well, I really would love to see these overhead HVAC systems with a little bit more, detail. I'd like to see the surfaces.
So the aesthetics.
Correct. They can change how this renders in AR. And with a device like the Magic Leap, we get a lot more processing power into what that can do. We can get more realistic type of rendering. And we can simply render more. We're not constrained like we used to be.
So if I'm some lunatic CEO who's building an incubator and wants to have a gorgeous looking building, but I want to see, this type of flooring. I want to see what it looks like when they epoxy it. I want to see what rugs look like. I want to see what the ceiling looks like with different treatments. You could actually make this a design consultation and let people see high fidelity. But when you're doing construction, you just want to see what is important so you don't fall through a hole in the floor.
Correct. And we really did focus this for the construction. We think there's a lot of great virtual reality applications for the design side. Where Argyle comes in has been views, where views have been important. Like I see a gorgeous view behind you. We have winery builders who they put their folks on the job site and give them a view, and they have an imagination of what it's going to look like. But when the walls get installed, that view has shrunk. Yep. And this is giving them an actual perception so that they're not making that mistake, which is actually a structural design mistake you can't go back on, Jason. You can't just cut a bigger hole, unfortunately.
Right. So I'm making some beautiful hotel and I decide I want to have certain windows, and I think you're going to see this incredible vineyard. You're going to be able to see the waterfall and the deer and the sunset, and maybe you can only see one of those things. And then it's time to talk about bigger windows, floor to ceiling windows, a different solution. So this idea to not have regret in the design phase comes in.
Absolutely.
I don't want you to reveal if you're using the Apple goggles. What do they call them? What is Apple calling
Apple
theirs?
Vision Pro.
Apple Vision Pro. So just to be clear here, I'm not asking you if you're using them, but I would like to know your first impression of them, because certainly you're monitoring this. I assume you went to Apple's, demo day or something, and people on your team have seen them. But again, I'm not asking you if you're building for it. What are your first impressions? Because you started with the Microsoft, you went to the Magic Leap, and then you saw the specs on this thing. It's pretty darn impressive, I think.
It is. For our part, because we're more focused on the construction side of the house, our standards and safety say you have to have clear glasses. So I'm not sure we'll have the Vision Pro in its current iteration on a job site, but definitely in the design process. And in terms of just how Apple leads the way in terms of interaction, that's what I'm excited to see, because they're going to set standards, and I'm not going to have to figure this out by ourselves because Apple's going to be setting nice interaction standards.
Got it. Yeah. So how you click, how you swipe, how you pinch, how you zoom. Right now in AR, there's no standard, is what you're telling us. Each platform has its own sort of toolkits.
That's true. And to the extent that they've tried to make them multi-platform, there's been some disappointment in that. So there tends to be a little bit of rework as you move to each platform.
What a disaster.
I know.
So how does one, get this brand new product into market? How many years have you been working on it? I know we've been involved for a year with your company. How many years have you had it in market? And how does one go to a customer, even an ideal customer, and convince them to do a new behavior with a new technology? And what have those discussions been like? Do you convert 1 out of 10 people to become paying customers? Do you convert, 1 out of 10? Is the market ready for this?
Yes, the market is absolutely ready for this right now. They're in pain, and that's been the main driver. Tons of industrial construction's been coming up, and that is a particularly complex type. Today we showed commercial examples. We can't show our industrial examples, but we're talking semiconductor facilities with layers on layers on layers of pipe and electrical, and just so much going on that without visualization, they're making huge, huge errors. So the market's absolutely ready for AR, and the demographics are changing such that we see really 3D gaming natives like myself who just kind of expect our data to be where it should be. It seems obvious to us that that BIM should be on the job site, BIM being building information models, that we should have the best reference on site. And Argyle has enabled that. It was a long road. So to that point, we've been thinking about this pretty much since the HoloLens 1 in 2016, when I first saw a really early prototype that, I think if you're just somebody looking on the internet, might look exactly the same as Argyle today. The difference is today it's an application that anyone with these models can use. And that road took about 3 years. We put it into market January 2022 about.
Yep.
Had a couple of false starts. And I think what launch and the accelerator were really helpful with was helping us focus on that sales and revenue. I'm such a perfectionist on the product side that first time founder, it was so good to get a push to be like, no, sell something you're not ready to. And your customers will tell you what's wrong with it.
Perfection will inhibit your progress, right? And so
completely.
If you are unwilling to put out your product when it's not perfect, then you're not going to get customer feedback, which means that you have a harder time making it perfect, right? Because and now Apple, listen, they're the last one to release their goggles and AR goggles. And so they do have an argument there for, there is a school of thought of make it perfect. But even if you watch this time, they announced it with it not being available for sale.
Yeah.
And there was a big internal brouhaha. Should we wait until this thing is more like sunglasses and you don't need this battery pack on the side and it's less than $3,000? So, they even had a change of heart with this one. And, they didn't do that in the past. They always waited. So you got to get the product out there.
Got to get it out there. And we've learned so much more by doing that. And I'm starting to meet what we call the superhuman standards of product market fit, where when my product breaks, it's a beta, they call me up and they're like, oh, I was using it today and I need it. And oh my God. And I'm like, oh my God, they're using it. Yeah. They need it. And it's gone from this nice to have to a need to have. And I couldn't be more thrilled.
That is an incredible sign. You're talking, of course, about Raoul's Superhuman, the email client, and in his product market fit machine and his philosophy, which, he's standing on the shoulders of a couple of other folks who have concepts around that. It is a great experience when people are using your product, you change something, they're like, hey, I need this to work.
Yeah.
It's super motivating for a team. This is why small teams are best in the first year or two of a company, because if you add the sales and marketing function before the product is got some level of product market fit, well, then you're just burning money and it's kind of depressing because you spend $100,000 marketing something that people don't need or that doesn't solve a problem for them. But you knew this was solving problems for people. And then marketing for you is what? Just emailing people and sending them a video link and saying, here's what we can do for you. And then they call you back?
Kind of. Yeah, we do some cold outreach. We get a lot of inbound. When people see our videos, we do have a distinct visual style and we are showing, real value on a job site. So every time I post something on LinkedIn, it seems like it goes nuts and I get lots of shares, and that's been very exciting. And then after that, it's about, do you have a device? So currently, biggest bottleneck, Jason, is getting them with the best device. So it's all about getting it on these iPads, because just about everyone on a construction site has an iPad in their pocket.
Well, that's a nice stepping stone, because if they use the iPad, they get value from it. People have always said putting a mask on, covering your face, it's a socially awkward thing to do. So maybe some old people are a little bit reticent, but if they use the iPad first, old people love iPads. Gen Xers and boomers are sending email on their iPads. I don't know how they do that, but they're typing on that keyboard on the giant screen. Yeah.
In all caps, usually.
All caps. Grandparents love it. Send for my iPad. That's their jam. They love playing Sudoku, whatever the heck these old people are doing. But that'll be like their stepping stone. And then I loved your point that young people who play video games kind of expect this, right? They expect to be able to interact this way. So that now that you're finally here, it's going to be great for them. How do you charge for this? And what's the business model, briefly?
It's SaaS. So we license the software. It's bring your own device. We recommend the Magic Leap at this point. And it's $600 if they want to pay month to month, or $6,000 for the year per device. We see sites who just have one. They'll take it around to a few of their favorite projects. And then we have some sites where they have several and they're using it daily. to get the work done on a big site. So it's just kind of scales to the size of a project.
Fantastic. Okay, so let's do a live demo.
Yeah, Logan.
This is
So
co-founder
CTO,
Logan.
co-founder Logan's here. He's going to be wearing the Magic Leap and showing us a little bit of the interaction. So you asked earlier, how does the content get in here? So this is an example of a file. This is a Revit file, and I think our structural friends made this. Anyway, there's an Argyle button at the top of their ribbon. They just click that whole file into AR.
All right,
And
Dr.
this is
Brown,
the same file.
show us. Okay, Dr. Brown, show us the flux capacitor.
Here it is.
I mean, you literally look like, you should wear a lab coat with your Hawaiian shirt. You look like Christopher Lloyd in Back to the Future. If you're not watching this right now, you're missing out. He's got a great shirt on. All right, Logan, here we go. Dr. Brown.
All right, Logan's in.
Where we're going, we don't need cars.
Logan's in Benson High School right now. This is a model. Logan, go to the model tab, actually. So around Logan is the wireframe of all of these various trades models. And trades, I'm talking, there's a plumbing model here, an electrical model, you got your HVAC systems, and all of these different models came together in Argyle, and they're all clicked on. Logan, if you arrow button down, you can see that he's also got different categories of the model on. You might want to turn off plumbing and get it out of your way so you can have a better view of electrical, for example.
Got it.
There goes plumbing. Oh, goodbye.
Yeah.
So underneath that are our alignment tools for the end user. Here is where somebody might set a fine anchor if they needed to set an alignment from scratch.
What's a fine anchor? I don't know what that is.
Pull up an anchor, Logan. That little widget will help you set anchors as you go. So let's say you walk 50 feet. These devices inherently may understand that to be 51 feet or 48 feet. So you need to set some corrective anchor, and you need to have a way of doing that. And this is how we do it in Argyle.
Got it.
What Argyle then does, its patented alignment technology, is saving that and creating a nice spatial map so that when one of these anchors breaks, Jason, which of course it will, we're going to pour concrete, we're going to bust the wall, we're going to move pallets of materials. When those anchors break, the other anchors make up for it.
Got it.
So we are not here. This is the Argyle tiny dev office, but in the model, we're in the Benson High School. So this is not a true overlay of a real site.
Right.
But we're just kind of looking at the UI here.
It's amazing. So you get all these great layers, like you might in Photoshop, and you just turn them on and off to see what you want to see. Now, if you're the electrical person, you might want to turn everything off and just see your electrical, make sure you understand it. But if you're plumbing and you're coming in after electrical, hey, maybe you're leaving the electrical on so you don't have the plumbing run into the electrical by accident.
Oh my goodness. And HVAC, they're always getting in people's way. You got to put them in there first. Those mechanical systems. There's some other functionalities here. You can change the rendering style. There's a cool little measuring tape. But yeah, let us know if you've got questions. This is about it. One of the things I do like best about this is it's not just a visualization. You actually get the metadata included in this. So if Logan were to click on one of those mechanical systems, he can see that, that's exhaust. You know, this is a supply
So for
air.
somebody coming to the site who was, let's say I was an investor in the company, or I'm part of the architectural group, but I don't do the plumbing or whatever, I could actually go through here and learn about this stuff without having to annoy people.
Absolutely.
And ask
and I think
questions. Wow.
my generation wants to answer our own questions, and this gets us a lot closer and a lot further along.
Got it. Amazing. How many people on the team now? How many full-time people or full-time equivalents?
About 4 full-time equivalents on the team today.
Right. Excellent. So you are a nascent startup figuring this out and really got great product velocity. So when people ask me how we pick companies, we like builder founders, we like product velocity, and we like a deep understanding of the customers, and world-class design. So if you look at the startup, you're seeing world-class design, you're seeing product, builder founders, amazing, and real customer focus here with great product velocity. The product keeps getting better. So just congratulations on everything. It's just great to see how much progress you're making.
Thank you. Thanks for seeing it early, and that really encouraged us.
Well, it's great to be in our position to meet founders when they're conceiving of these products and make that first bet. Thanks, Logan. Thanks, Dr. Brown. You got to get him a lab coat with Logan on it. It's pretty great. So what's next for the company? Obviously, building out the company, you're going to hire a bunch of people and then, move from these beta customers. I guess you have beta customers right now. They're still paying though, right? We have paying customers, so that's
These are
great.
paying.
Yeah.
So right now how construction purchases technologies. They'll start it on a project or two, and then the buzz will get around, and then people will want to bring that to their next project. So I'm hoping to land and expand lots of different construction companies in the United States, and we're also getting international interest right now. So we definitely need a team to support all of this.
Drowning in opportunity would describe your startup.
Oh, it's a horrible time.
I mean, this is very important, I think, in terms of founder advice, which you will get plenty of. But you got to nail those first couple of customers so they will become reference customers, lighthouse customers. You really got to be careful that they don't get disappointed. And then you have that, that negative problem when you take on too much work. I did hear you say going after more complex buildings, those people have a more acute need for this. So am I correct that your ideal customer profile might be, like a Tesla battery factory or a chip manufacturing factory or a data center, something where there's a lot more infrastructure than in my house or a hotel?
Correct. That's the people who have the most pain and the most people on site who are putting these headsets on. So that's to me telling me that this is the tightest, fastest group. Homeowners love it, but it's a different sort of...
Feels like a vitamin to homeowners and people building, non-commercial properties, but it feels like a painkiller. If you're building a data center and you've got not just HVAC, but you've got like serious HVAC and flooding equipment and raised floors, and then whatever those systems are that pull all the oxygen out in case of a fire. I forgot what they were called.
Yeah. I don't remember either, but
super dangerous because if a person gets left in there, all the oxygen gets pulled out of the room, you suffocate. So they have like a big alarm system to make sure nobody's in there when they have those systems go off. Well,
did you get to tour some of those?
Back in the day, when I was an IT guy 30 years ago, we had data centers and I used to put servers in racks back in the day. Yeah. But that's, that has become quite a science and the scale of them is otherworldly. I mean, you're talking about tens of thousands of servers. And when I was doing it, we were putting in dozens of servers. 100 or 200 servers was considered, whoa. 10 racks with 10 servers in each was, very rare to see that size of a footprint. It didn't really exist before the web and before big data, before people started storing stuff in the cloud. And you had these big data lakes of photos or transactions and stuff like that.
All I can say is I'm so glad for the cloud, Jason. I don't have any server setups here. It's so nice.
Perfect. All right, listen, continued success, and we'll see you all next time on This Week in Startups. Bye-bye.